Hey, it's Joel Sikoya with another variable rate update. The last one we're going to do for this year, as my team is off all of next week. I'll still be around if you have some mortgage needs, but I thought I'd take this video to reflect on as we've come to the end of the year, knowing what we know now. If I were to go back 1 year ago to December 2021, and if we'd known what rates would do, what the climate was, how would I advise you differently? How would I advise you differently? So yeah, I mean, we're looking in the rearview mirror a bit, but I think this is important as we see conversations. People do handle these rates at a variety of different emotions, and it certainly is very gutting to us when we have a client that feels like they're very upset and pin that on us, and we feel bad about all those types of things. But here's what I think. If we had known that rates would be sitting at a prime rate of 6.4 or 5 down the road, I think we would have done. We would have prepared clients to move up their payment quicker. If a client had a variable rate for a year or two, we would have encouraged them to put more towards the principal sooner than later, and that would have absorbed a lot of the payment shock. It would have just meant that we had some more margin to play with, and it just would have been a situation where you wouldn't have seen payments go up as high. You wouldn't have seen payments go up, or you wouldn't have felt it so much so quickly. So that's one thing we would have done. Secondly, I think we would have painted the picture and done some really good comparisons onto the fixed and variable rates. We wouldn't have recommended a fixed rate, but we really would have painted out what those scenarios might look like with the higher payments, and it might even have meant we would have took more clients took into fixed rates, but that is what we would have done. I mean, we wouldn't have recommended differently, but we would have just prepared people for the storm better from that perspective. But in our defense, this is super important. Tiff Macklem, the Bank of Canada governor, was saying just a year ago that the worst case scenario they predicted for rate increases was 2%. When we think about clients having 1.45% mortgage and the risk of them getting a 3.45%, it's really not so bad, and quite different than what the reality is that we have today. So I think those are the two things we would have really done differently. Would we have bottom line recommended a fixed rate over a variable? We probably wouldn't have. I haven't changed my mortgages from variables to fixed rates. We wouldn't have recommended it because of two things that are important. A, and you'll heard me say this before, since 1952, a variable rate has outperformed a fixed rate 90% of the time. There is a lot of economic events that happened during time. Wars, the 1980s, the financial crisis. And so we think about the situation we have today, it's not unique. We've had this before. And so the idea that we'd say, okay, now we have to abandon what historically has been the better bet by a long shot, because it seems like it's different this year over previous years, I just don't think is the smart move. Secondly, I think people are really forgetting the idea that penalties are a big deal. A big deal. Just because rates are higher doesn't mean penalties are lower, and people are going to inherit penalties in the next couple of years that they are surprised on, and I really think that that's going to be the big deal when we move from a variable to when people go to a fixed rate. Of course, you always have the ability to lock into a fixed rate any time, and I think this is important. I see a lot of people that when we talk to us, I feel like they feel like they should have, that they wanted a fixed rate and didn't take one earlier. Remember, you can lock into a fixed rate any time. There's nothing stopping you from doing that. We wouldn't recommend you do that. It's still your mortgage. You're still going to pay it. So anyway, those are some things we would have done differently in how we would have advised people. But you know what? We still would have advised the variable rate. We just would have given some more tools, and we would have given some more preparation around things. I realize as you look at your variable rate right now and you think, oh my gosh, we're way higher than what we want to be. That can be unsettling and upsetting a little bit, but that is just the reality where we put things. So anyway, if you need help with anything, we want to help you with all your variable rate needs or your mortgage needs, please reach out to us. We'd be happy to give you a hand. And thanks so much for sticking with us this year, and we'll speak to you again in the new year.